The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rose.
Welcome, folks. Darrell Martin, Tom O'Brien. I appreciate you growling and prowling out here with us. We have the Dow right now up 38, NASDAQ up 28, S&Ps are up 3.5. And, folks, if you haven't test drove the Nadex product yet, or maybe you're out there trading it, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can hit that banner, bring up an account right here, right now. They'll put $25,000 of funny money into it, and you can be out there on an outstanding platform with low risk, decent reward on a continual basis. Don't forget, each and every trading day here at TFNN, we have live programming from 9 in the morning, 6 in the afternoon. You can get all of that program right on your cell phone at TFNN.mobi. We also take that program and do it 24 hours a day. Each and every trading day, 1 to 2, our man, Mr. Darrell Martin, he's out here growling and prowling with us, trading that Nadex platform each and every day. Darrell, what's going on?
Hey, man, how's it going?
It's going to be a good one, man.
Yeah.
I want to attack. Now, let's look at your analyzer here, because this is what I want to do. And I know the tick count is not the best, but I want to analyze this NASDAQ, and this is why. So this is what we have in NASDAQ, folks, okay? So check it out. You have the nice high that was established on there Wednesday. If I start with the Qs, that's 82.90, okay? Now, you're up there. Nice, it did 43 million shares. That's the first part. Second part, is that how we had come down when we had come down on the 2 weeks ago, October 9th, you came down with some real juice, okay? The actual NDX, the composite, what the composite had done is that it finished a whole A to B equals C to D, and the NDX 100 did that also, coming off of the 2006 lows. Okay, so now that being said and done, when you look at this market, we have the Dow up 40, NASDAQ's up 27, but in the context of where Amazon is, because Amazon is driving this baby, the NASDAQ is not up that much. Well, between the Amazon and Microsoft. Amazon's up 33 bucks, okay? Microsoft is up, I think, about 250. Yeah, 250. So inside the NDX, watch what you have here. So this is pretty cool. So the drivers of the NDX right now, Amazon, Microsoft, Maximum Integrated, and Computer Associates, I think. CA, the new Computer Associates? No, CA. Yeah, I guess that maybe is the new CA. I believe it is. Okay, so inside that context, right, what you have is this. The Amazon has just finished a 1 to 1.50 ABC structure on the way up. Okay? Microsoft, MSFT, is going into a gap, MSFT.
Right.
And that little baby, had come down hard. The last high out here was 36.42. We're at 36.24. We've hit 36.28. Well, Microsoft blew apart with 248 million shares. Now, it'll do 150, 160 today. We'll see whether it can get up there. My take is that what we're going to see at the end of the day, okay, is a failure on the NASDAQ. So what I want to do is I want to get on this Nadex platform, and I want to take advantage of it. So I want you to use your analyzer here, and look at this as we're talking. As we're talking, I must be pulling this string.
You're the puppet master, huh?
Oh, my God.
So you're looking at getting it now?
Yeah.
On that pullback?
Yeah.
Okay.
Yeah. No, I'm selling it. I want to sell it.
Oh, right, of course, yeah.
Yeah, of course, I know.
Of course. What else would you be doing?
Of course. I know, man. I'm telling you, man. See that big bare face, right? Oh, my God. Sad. Sad but true.
Okay, so here's what we got. Now, if you're doing the spreads, you already know my thing on the spreads. But if we're looking at the spreads, you do have a couple of really low risk ones.
About that. Let's talk about that simultaneously, because I know that what happens with the spreads. Let's talk about that, because this is important for them to understand also. Okay, the tick value is too much. Okay.
Yeah, it ticks in whole points instead of quarters,
right, or
dimes,
right.
And whereas like the S&P, even though like the normal ES ticks in 0.25,
right.
on Nadex it ticks in 0.1, which is great.
Right.
So basically every point you're making more. But and the Russell it ticks the same 0.1, and the Dow it ticks in whole numbers just like the Dow. But the Nasdaq they basically made it tick in a 1 instead of a 0.1. So the market has to move a point for there to be a point move really in that spread.
Right. Right.
So we do have a couple of them. There's a little bit of a move up. Most of them are going to be out of the money. So it's sort of which one do you want to do?
Okay, then hold it. Then hold it. Well, I can change that deal.
Okay.
Let me just see something, because what happens is that
we got 12 points out of the money are the low risk ones right now.
Yeah, that doesn't work for me.
If you want to hold till 415, which I'm sure you do.
Yeah, no, I definitely do today. Okay, so then it's going to be the S&P. Let me pull this up for a second. So what's happening with the S&P, folks, is that the S&P is coming into, if you happen to be watching Tiger TV, what you're going to see is this. The downdraft that we had, that was created on the 22nd, we came off of the number of 1752 on a 10-minute with 130,000 contracts. Now we spiked that coming in this morning with 31,000. So I like that setup there. One second, hold on. Let me put this. Okay, so I will let's sell the S&Ps instead for 415. Because what you have, folks, is that what you don't want to do is, when Darrell just bringing that up, is get out of the money, particularly because there's two different things that end up happening. You're out of the money, number one, which can always be a problem, just to get back in the money, and you're giving up way too much.
Yeah, I mean, you're talking about the market's going to have to move 12 points for you to even be break even.
Right, exactly. Which
on
a
Nasdaq,
Friday, folks, that's throwing the dice, and we don't want to throw the dice here. That's the bottom line. That's for Vegas.
So now you also, do you have a target price?
Yeah, I do. Thank you. Okay.
On the Nasdaq, what's your target price on the
on the S&P or the Nasdaq?
The Nasdaq.
Oh, okay. Yeah, no, I do. On the NDX 100, right?
Yeah. On the NQ.
Yeah, exactly. And QZ3. And where it is, folks, it's right at the lows of yesterday. Yeah, it's where it's 33.74. I see a test of 33.74. Where I'm going with that is this, by the way, folks. It's the same benchmark going over from the 22nd of October. Actually, that one there is all the way down to 33.38. And we blasted down there with 37,000 contracts. You end up going topside yesterday with 7,000. And your probability would go up dramatically once you got back inside 33.79. And right now we are at 33.83. You get back inside 33.79, you get action. Now, what has also happened is that as soon as the market opened, what we do have right now is that you have a high volume spike that will get tested at 33.76. That was the first spike at 09:30 this morning.
So basically, you're estimating it'll get down to what price by the end of the day?
By the end of the day,
lowest price.
The lowest. Let's see. Give me 3 days.
Call the bottom, Tommy. Come on.
I'm done. No, that's it, man.
I've seen you do it.
That's what we do. Okay. So conservatively, I'm looking for 33.74. And liberally, I'm looking for 33.38. That would be a score beyond belief. But 74, which is only 9 points from now, I think that's doable.
Okay. So let's look at two ways to do this.
Okay.
And this actually would be a binary strategy. Okay. So if we were looking at the 33.74, I got the binary scanner pulled up.
Yeah.
And I just basically cleared out all the filters. I just went down to the 4:15 expiration.
Okay.
And what you'll notice is you got all the dailies and weeklies here. On the 33.74, you can sell that right now for about $70. Okay?
33.74. Okay.
Which is right around $30 risk, and that's going to be actually the weekly contract.
Oh, I was going to say, I get the daily up, I can't find it. Okay, so
yeah,
the
see, that's the benefit of the scanner. It puts them all on the same page.
This is so cool because you can do the weekly on, because it's Friday, right?
Uh-huh.
Okay, so 33.74. I have it right there. Okay.
And that's actually about 73, so you got about a $27 risk on that trade.
Right.
Okay? Now, you could also, once you entered it, you could set a take profit to buy it back at 57. Okay?
Okay, hold on.
Or if you want to be really like, I mean, you could go for 53. A lot of times I do like 57 to give myself a little leeway.
Okay.
But, so you can go in there, you can set that, you can set an order to buy it back. And you're pretty confident about it hitting 33.74 before the day's over,
yes.
right?
Yes.
And then you could use some of that money to go for that big score.
Okay.
So you're talking about like 33.38, right?
Yes.
Well, if we go down here and look at this, what we can see is you can get the 33.38 for the same price as the 33.40. For only 50 cents more, you can get the 33.44. For literally $1 more, you can get 33.48. I mean, so we probably would go for like 33.50, really, because I mean you're talking a $4 risk on the trade.
Now, see, that's really cool, man. Okay, I get that. This is where this gets really intriguing. Now,
so what you're doing is you're setting up a layer.
As we're talking, I should have hit it right there. As we're talking, folks, the buy-in area went from 71 to 68. Interesting, man. Okay, go ahead.
So yeah, you set that up. And so let's just say, you put that in there. And once you get it set up, then you go in and you grab your other ones too.
Yep.
So I'm just going to throw these on right here. But that's one of the big things I love about the scanners. You can go in and you can, stuff that you'd easily miss because you're only, you only look at the weeklies
like
on Friday.
No, that one I can see right with it. And what's interesting here, what Darrell just brought up, folks, okay, is that I was on the dailies when today's Friday. So the scanner itself brings up everything that's expired at 4:15. That's what that would have done. And the weekly, of course, expires at 4:15 too, right?
Exactly. Yep.
Yeah. Right.
And so we go in here, we throw this on. Okay, so let's say you throw on 10 of those, whatever. You put that in. Right now it's at $70. Okay, 69.50. It's fluctuating there, but we'll grab that. Okay, and then as soon as you do that, you can flip around and let's grab the other one first. So, and I mean, and the big benefit is because you don't really look at the weeklies until Friday.
Yes.
So it's so easy if you're just inside the platform to just forget about them.
Right.
And even if you want to look at them, you got to go back and forth.
Okay. Yes.
Whereas,
no, exactly. And when you see them back and forth, what happens, folks, is that you see all the contracts lined up, but you have to hit the right-hand side of the platform in order to go from 4:15 daily to the weekly, which is right underneath it. Right. Okay.
Right. I mean, you see how fast these things move. So it costs you $5 or $10 easy just clicking.
Right.
Right. So we go and we grab that one. And then we go, okay, well, if we're going to be targeting 50, we'll just say 57, okay?
Yes.
We're not talking, it's not a massive profit, but it's a profit, whatever. And it's a profit that we're highly confident of. So 70 minus 57, I mean, you're only making like $13, okay?
Yes.
But a lot of times what I'll do when I have, I'm expecting a large move, I'll use that money to buy the lower probability but a high profit trade.
Yeah, right.
So you go in here and you lay in like the 33.50 contract for only a $4 risk. You could do 3 of those. If your first one gets hit, you're basically break even.
Yes.
If that one gets hit, now you're making some massive cash.
Wow. Hey, you stay right there, folks. Darrell Martin, Tom O'Brien. Appreciate you growling a problem with us. We'll be coming right back, folks.
Wednesday, October 30th at 6:30 p.m., Andy Hecht has a special live online workshop for his subscribers to his weekly newsletter, the Technomental Commodity Report, called A Roadmap That All Investors Should Use, But Most Don't. During this hour-long live webinar, Andy will teach you how to use free and readily available market data to calculate the future expected price range for any asset. It's a simple yet powerful method that every investor should have in their toolbox. The best part is that you can attend this live online workshop, which will be archived, by simply signing up for a 30-day free trial to Andy's newsletter, the Technomental Commodity Report. And this is the last month to lock in the low introductory rate of only $39 a month. This price will be going up by over 25% come November, so now is the perfect time to get in on the action. Sign up for your 30-day free trial to the Technomental Commodity Report today by visiting the front page of TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling out here with us. And we're setting up a few different trades out here, folks. And the NQZ3, that little baby, that she's going right after that high volume low from the spike this morning. And I believe she's right at it. And when you're looking at this, okay, so check it out. So the spike is at 33.76. We're at 33.77 right now. And we are at the 5-minute mark. And when I do these, folks, it's doing a 10-minute bar. So it's going to get interesting to see. So what happens here is this. There's two different things that happen. You're looking, number one, for the contract value. I'm looking at the futures. We're trading the NASDAQ Nadex product. But what you're also looking at is the spike from yesterday, which is the top of that. Now, the further it gets into the 33.79, which is 3 points into it right now, guess what? That opens up the number we were talking about, which is the 33.38, the 33.50. So this is going to get really interesting to see how this shakes out. Now, the wild thing, I'm trying to, even in the break, I'm trying to figure out what is the, when we were just talking, I was looking at Amazon, I'm looking at Microsoft, but it's not Amazon that's breaking down right now inside the, it's Microsoft. Beautiful. Okay, so it's Microsoft. See, Microsoft only has to pull back a little. It's such a large portion of the NDX 100. Microsoft had hit 36.29 and it's only down 30 pennies. But 30 pennies from that point, it's still up. But I was wondering what was pushing the NDX 100 down, because it wasn't the Amazon at this point. But I suspect what you're going to see, folks, is the failure out here today. Now, the real key is going to be in the composite itself. Can the composite do less than 2 billion shares? And right now, in an hour, we're at 540 million, which is a lot of shares, folks. So this is going to get interesting, man. So,
and we already took profit on half our position, by the way, for the 3374s.
Yes.
And I got the other half on there still. We're within a couple bucks if we could take profit on them. We also added in the 3350s and the 3340s. Okay?
Yes.
So we put those on there. I put a take profit if it hits either one of those strikes to just take profit at 57. So not waiting for it to get, to expire down there.
No, that's huge, because what happens, folks, is that when the so there she is. 1 second, and I will be right back. I'm sorry, folks. I'm when I'm doing this simultaneously. A failure of what? My man Mitch from Boston is asking me. It's going to be the failure of the highs, folks, of the Wednesday highs, and this is why. So the failure is a funny word. Failure just means, folks, that you've gone up there, you've tested it, and you've failed on price, failed on volume. But the NASDAQ certainly hasn't failed. What the NASDAQ has done, and that's why I'm looking at this, the NASDAQ has done the full A to B equals C to D from the 2006 lows, 2008 lows. And in fact, if you want to see something, I brought this up on the air a couple days ago, folks. I had done one of these, at an A to B equals C to D, and it's on YouTube if you pull it up. In 2007, when the S&Ps had just finished, what the S&Ps did, folks, before the crash, is that they did an A to B equals C to D off the 2002 low. And I was thinking about this the other night, and I says, man, I thought I did one of these right before the crash. And I'm not expecting a crash, folks, but bottom line, I Googled it, and sure enough, there's one up there that is a mind blower, but it's pretty wild. So we'll see where this shakes out today. Now, the thing that's really wild, Darrell, right, is that, and this is what I liked about the NASDAQ in itself today, folks, is that Google's already out, and that was a monster, okay? Amazon's a monster. Microsoft is a big part of the NDX 100, and the NDX 100, folks, bottom line was only up about $18 this morning. That's nothing. That's a joke for the NDX. Let's put it that way. Okay? So, this is going to be interesting to see, can it hold? Because what you do have is that there's plenty of folks that are up, plenty of institutions that are up. It's going to be, okay, are they going to take their money or not? And we'll find out. So.
And so, with that, when it goes down, it hits you're like, it's easily going to hit this price. Bam, it hits it. And it's all a funny, thing, like, hey, man, this seems like it has to go too fast. Not really. I mean, you called the strike, right?
Right.
So all I had to do for this was I literally just had to go down, find the expiration time I wanted, 4:15.
And if you're in your car, folks, we're looking at Darrell's analyzer right now, and the reason we're doing it is that when you're trading this product, two different things end up happening. If you're on the analyzer is fed directly off the NASDAQ feed, the Nadex feed, and will give you the best contracts. You have to figure out which way he wants to go. Go ahead. Well, as soon as we come back, we're going to explain this, because this is crucial to understand, and it makes it so much easier. It's so much easier. It's unbelievable. Darrell Martin, Tom O'Brien, all you Tigers and Tigresses, you stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling, prowling with us out here. And our good old Tigers in the Den, folks, got the equity that is basically bringing the Nasdaq down. And this is it's a big weighting inside the Nasdaq, by the way, folks. It's Gilead, G-I-L-D. It traded as high as a 70.30. Now it's only down at 68.58. But this is always a trip when this goes up or down because the structure itself is a big weighting inside the NDX 100. Right now we're at the 33.76. Hey, let me ask you something. When I have another trade on. I got a couple of them actually in the Nasdaq. I got one at 11 o'clock. I sold those 33.95s.
Okay. So
what happens, folks, at 33.95? This is at 11 o'clock. My bottom is the 33.65. Right now, when I got it, so watch this. What I just did, I'm trying to buy them back at 33.65, right? So, but what happens is I just put this 33.65 in, place order, and it's telling me the price you requested is beyond the market ceiling or floor.
You basically need to put it like one tick above the floor, one tick below the ceiling of the spread.
Thank you. Okay. So what I'm doing here, folks, there's only 10 more points that I can get out of that deal. So instead of basically letting it wait around, I'm going to say, okay, I will take that. Interesting. Okay,
One thing that's important to remember is, I mean, being an option, a Black-Scholes model option, there is going to be a little bit of premium in there. Obviously not a lot, but a little bit.
No, I'm with you.
And so, if you just put it one tick above, you have to go, is anybody really going to take the other side of that trade for a one-tick profit? You know what I'm saying?
No, I got it. Okay.
So why would they only go for a one? I mean, just after their fees alone, they'd be losing.
That totally makes sense.
So you may end up giving up a few of those ticks just so you can get your fill and take your profit.
And that's all right. And so what happened, just to say, understand on that trade, folks, what was kind of interesting about that trade, if you go into a trade, now the top of that trade was 33.95, and the NASDAQ at that point was trading about 33.91, but you didn't give up, which was pretty cool. I gave up hardly nothing going into it. Do you know what I'm saying? I gave up maybe a point going into it. Versus, on some of these you can give up a lot more than a point. So, and it has to do with where that ceiling is too, folks, on both sides. So.
And one of the ways that I will look at it, try to figure out sort of like what could I probably get out at.
Yes.
Is I'll look at some of the, out of the money spreads or whatever.
Okay.
Or low risk spreads and see like what are they priced at.
Right.
And, you can see one right over here. Check this out. This one's like 33.50. Here's a 33.55. They're between like $4 and, $10, depending upon where they're at.
Yes.
And so let's see if we can find it. Let me get rid of all the filters real quick. There we go. So by finding something that's either deep in the money, actually deep in the money would be one of the best ways to look at it, because if you're selling, you're talking about it being all the way at the floor or below it, right?
Right.
Okay. So by looking at that, I can go, well, what are they pricing this at? And check this out on both of these. They're both, and they have the exact same. They have different expirations. So this is actually interesting. But different widths, different everything on here. But notice that they're basically priced about $6 above.
Okay.
So being all the way below the floor, because the floor is like at 33.80.
Yes.
Okay. So essentially, what that's telling you is there's pretty much $6 of premium that's going to be in there.
Yes.
So if you want to exit out of your 11 a.m. spread over here, then you probably want to put it like $6 above. So like 33.71.
Okay.
If you want to get out before it, I mean, those things don't expire until 4:15. Now, in reality, that number is going to get smaller and smaller as we get closer and closer to expiration, simply because there's less and less premium in there, and you're pretty close. You're at 11 a.m. I mean, we're at 11 a.m.
I got 11 a.m. Then I got another one. This is a pretty cool one. I think that's going to. We'll see whether it works out. But I have the 32.80 to 33.80 at the 4:15. I sold that.
Okay.
So that right there, folks, what I need, and that's only 2 points in the money. I just need to close under that 33.80. But what happens with that, of course, that's a spread. So, we'll see,
Oh, that's one of the ones I was talking about the first part of the show.
That's where I went.
It was out of the money, but it went into the money.
That's where I went. Yeah, that's where I went.
So those right there were the ones to, pick out right at the beginning. And let's see here.
And I gave myself plenty of time. Do you know what I mean? So
you have it all the way till 4:15. I mean, even on these other ones that we're doing with these other, even the binaries, both of them doing great. One of the binaries is already, we take profit on half. The other half is sitting there about the same price. And then we got, the ones that are way out of the money, just in case there is a big fall.
No, listen.
And the cool thing is, layering is so huge. I did this on Google.
Yes.
Whenever the Google earnings release came out. And I went in and, I layered. I did a very conservative one.
Right.
That is like a 1-to-1.
Right.
That I really just expected to take profit. I really had no expectation that it wouldn't happen.
Yes.
I mean, it's going to move up or down a decent amount, no matter what. Google's coming out. And, but then I took a good chunk of that money and did some that were a little further out, very low risk, ones that I wouldn't just do by themselves because it's like throwing money to the wind.
No, that's right. That's right.
But I'm like, there's a high probability that this thing's going to move. There's a decent probability it could explode, because it's Google earnings. So, but instead of just throwing the money out there completely, what I'm going to do is I'm going to take some of my profits and put it into this very high profit trade. And I mean, we're talking, $100 to make 1,000.
Right.
Or 900, I guess, net.
Right.
So for every $100 put in. And so that's sort of like, this, I mean, obviously this isn't as big of a move, but it's a very similar thing. We're going in, we're trying to make like, say $20 or whatever, and then we can take maybe like 10 of that or 15 of that or whatever, and you can go and put that on maybe a further out strike for a very high payout.
And there's no doubt. And what happens there, folks, is just like the one I have at 11 o'clock. If, in fact, it plays out, and we will see, but it's playing out pretty good right now. If it does, well, then, you can take 20% of that bread or whatever you want. In the context, as long as you feel that it's either going up or down, depending on what way you're looking at it. And right still to this point, and the NQs, as long as the NQs, folks, stay under 3379, 0.75, guess what? You know, it's open to get down to 3353. And that's a good number, folks. It's particularly a good number when you have a couple of these equities that are up so dramatically. That's what it comes down to. So
it's also the only indice right now that has not filled its gap for the morning.
No, and I like the idea of the that we finished the larger deal out here. Do you know what I mean? The larger deal is a big deal. Because when these numbers get hit on the large, so picture this, folks. You know, you're talking about a deal that started in 2008, which is 2013. Well, and we had the straight line move. I mean, the last move, and the Nasdaq and the S&Ps and on all of those, it's been straight line for 11 months. You know, so you know, on dailies, weeklies, monthlies, when you finish an ABC structure on the way up or down, they like to do something different. That's the other side. That's what you're hearing off me right now, which is, you know. And we'll see where it shakes out. But the S&Ps, you know, it's going to be interesting here. The S&Ps themselves, the E-minis, what they have just done, they couldn't handle, right when Darrell and I started the program, they could not handle the downdraft that had taken place on the 22nd of that first sell. So what you get there is this, folks. Is that first sell, you got to remember something, that you get these monster funds, these monster operators in the marketplace. Well, whoever sold, guess what? On the 22nd, they sold right into this one too. And, you know, they'll basically, you know, they've made a line in the sand at this particular point. Doesn't mean that it won't go above the line, but let me tell you something. You're talking about a supply line, you're talking about force, and a bigger operator that's saying, I'll sell you everything that you want at this particular point at that level, you know. So it's going to be interesting watching how it continues to go up to that level, because every time that you actually see the indices go red on a Friday after a run like this, it's going to make a huge difference in the psychology. And you can see right now the small caps were the first ones that failed. The S&P are getting there. The Nasdaq's not there yet, but it's getting there. Well, the Nasdaq has already failed the highs. Okay, but you don't have selling down off those highs yet. The composite right now got as high as 61. Right now we're at 45. If it closes under 47, 35, 47, guess what? That's a failure. The real key is going to be, is it going to be on lighter volume also? We're at 11 million on the NQs, the QQQs, and we're 1 penny away from a failure. We're at 82.90 is the number, at 82.91. We've been it's only down like 20 cents off this highs, you know. But this is early, you know. This is early, so.
So you know, we were talking about, you know, the scanner making it easier, because I mean, in my opinion, Nadex is the best way to trade.
Yeah.
But it's also, I guess, honestly, it's complex.
Right.
Especially when you first see it, because you hop in, and let's say if you're looking at the platform, I mean, you got all this stuff you're choosing from and clicking everywhere, and what do you make of it all? And then there's all this math you're trying to do. And, you know, so one of the things I think is really important, you know, for those even, you know, driving, listening, what we're doing is we're taking all the data from the exchange that's coming in. And, I mean, you literally could be talking about 100 contracts available on any given instrument at one time.
Yes.
And we then feed it into the server, and we let the server literally parse out all the important math. And so that way, instead of you having to click between 5 different pages on this one instrument,
right,
on one page, you have all the information you need, and all the math is done. And, you know, for example, you know, we got like risk reward, you know, right here, automatically calculated.
That's so cool, man.
Because, you know, the buy is pretty simple. You know, if you buy, the risk is $29, and the reward is 100 minus that, but you're still doing it. You still have to do the $71 math.
That's right.
The sell sort of throws people off, because the sell is your profit potential.
Right.
You know, so if it's 25, you can make 25. You're risking, you know, 75. But it's telling you all that, and it's updating live. You can see how it right here updates live for you. And so all that's done. And I was doing the NFP report. My daughter, I went with her and did a, you know, Dads for Donuts thing this week. Yeah. And you go up to the school, and it's in the library, and they have donuts and coffee and all that stuff. Yeah. And you're reading books to your kids, and really it's a book sell.
Okay, cool.
But it works. You know, we were all buying kids for our books.
Totally.
And anyways, but I mean, you know, went up there, but, you know, right before I went in, the NFP, I get my NFP trade on.
I love it,
you know,
man.
So I hop on. I literally pull the scanner up on my phone.
Okay.
I look and I see, okay, what are the best, you know, spreads I could put on right now? And what was cool, I never would have looked, because I almost never look at like the 415s for doing like a news trade, okay?
Yes.
I look at it, and I saw the 415s cost $1 more on the spreads than the 11 a.m.s.
Wow.
The implied volatility was so low. It was like
sick.
about 7 o'clock. I was like, I'll take that any day.
That's sick.
And so I hop on. I hop over to the Nadex app, and now I have a Samsung Note or whatever. I had the the iPhone before, and hopped over to that. And so now I've used it both on the Android and the iPhone.
Okay.
But hopped over, placed my trades, set my take profits, went in, enjoyed it. I left a few of them open because I figured I'd write them out, just in case it was a massive move.
Sure.
And but I mean, it made it that easy because it did all the math. It was right there. I didn't have to sit there and spend. I didn't have 20 minutes. I had a minute.
Right.
And I placed 3 different markets. I placed all my trades. There's no way I could have done that if I was trying to like hop on the app and click around it. The only thing I could have done was done a best guess.
Right.
Which could have cost me a lot of money, and actually it would have cost me a lot of money because I rode most of these way past 11 o'clock. So, I had contracts where I was making, 90 pips. Well, that's way beyond what I'd been, looking to make on either side. And so it...
and percentage-wise, folks, it's big dollars, but percentage-wise, you don't even want to think how big it is, okay? Which you got to always think. Do you know what I mean? If Darrell didn't have the analyzer and he just hit it, because I've done it. I mean, I know what the difference is because I'm using your analyzer now, and I know what the difference is in the context, And what ends up happening is that I don't care how many times you've day traded, folks, go over and use the analyzer because the difference is dramatic. Yeah, we can get in and out, but the fact of the matter is that it does the huge amount of work for you. So you'll make the determination whether it's a long or short. You can let the analyzer make the determination of what is the best contract to keep your money management in place and your probability in place, and the quickness of the deal. Because the quickness of the deal is the name of the game, folks. Because when these move, you don't want they move quick. So.
Well, and I mean, let's see here. Like, I'll show you. This is pretty cool. I took the Samsung lets you like take screenshots. It's sort of cool. And on the phone, and let me see if I can pull them up. I'll show you. But I mean, some of these were just, like I said, insane on their risk-reward layout. So that's 3 o'clock. That's not what I want. Okay, there we go. There's the Aussie. Yeah, check this out. This is the Aussie. Like 3 o'clocks right here. $10.
Yes.
I mean, the risk were just so low on some of these contracts that I couldn't believe it. I was like, what is going on? I mean, I'm not going to challenge it. I'm loving it.
No.
But I couldn't believe our risk was so low on so many of these trades. And I've never literally seen them be that low before at one time. And
what happens with the currencies, folks, okay? He's talking about announcements that are coming out. When announcements come out, folks, if you're trading the currency markets, right, you shouldn't be in. But guess what? In the Nadex product, you can be in because it's a defined stop. That's the bottom line, They don't blow by them. Because you can blow by them and then come back up on the other side, and guess what? You're still in the trade with a defined stop. Different ball game altogether. If you are trading currencies, I'm telling you, try the Nadex product. The difference is dramatic, big time.
And check this out right here. We got this is the dollar franc. This is one I took from my phone, and you got the 10 a.m.s, okay,
yep.
And you have the 3 p.m.s. So if you can see that.
I see it.
Yeah, little arrow right there.
Yes.
So you got 10 a.m., you got 3 p.m., $18 risk, $19 risk on the buy, $16 risk, $17 risk on the sell.
Unbelievable.
And the trade, it took off. $670 right there on my dollar franc alone.
Right.
So, just an insane, easy trade.
Folks, you stay right there. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow up 16, Nasdaq up 17, S&P's are flat. We're going to be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow's up 21, Nasdaq's up 18, S&Ps are up $1.50. And let me show you something out here, folks. So we're still talking the Nasdaq, and you had Wynn Resorts. Okay, Wynn Resorts is down to 588. They had got to a low of 163.80. You're at 166.97 now. Now, this is important to understand, particularly, I sold the Nasdaq, right? Guess what? This is doing an ABC structure on the way down. What you have, folks, is that you have a high volume low on the 10-minute, 347,000 shares. So check it out. It just goes up to the price point of 167 from 163 with, guess what, 55,000 shares versus 373. It just tested it with even lighter shares. Now what you're going to see, it's going to go after the low, and very well could be another ABC structure on the way down. So for the 415 one, that's going to be a beautiful thing, man. Never mind Gilead, never mind Microsoft can't make it up there. But that's kind of how you want to basically, if you're inside an industry, how you kind of want to pick it apart, folks, okay? it's important to understand what the weighting structure is and what's moving it. As our targets, they gave us a heads up on Gilead, which is just dynamite. Gilead just did the same thing. Gilead got to a price point on account. Well, first off, this is what you have. We have a high volume low at 68.20. We're at 68.67. We had that low at 566,000. Bottom line, it just failed with 161,000. Okay, that's that. There's going to be an ABC's down, and guess what is game, folks, on this one? 66.64. And 66.64 was the low of the 22nd of October. Telling you, man.
See, people say I talk fast. Come on, man.
I know, man. I know. You know, it's wicked, man.
They're like, you're from Texas? Seriously?
Particularly when you're basically, talking and trading simultaneously, folks. Okay, which is always so much fun.
Well, one, we're excited. We love doing it,
right.
And you got to be going somewhat fast because the markets aren't slowing down.
There's no doubt. There's no doubt. And what happens, folks, is that the moving pieces. You want to be cognizant of the moving pieces, and it flows. It flows in harmony. It flows in harmony, but you do want to be cognizant of that. Okay, what is it doing? Because what I love to see is actually what just happened. Then is that you have a small counter trend bounce. It is on dramatically lighter volume, and you have a high volume low that's out there. Because your probability is pretty good, folks, that it can go test it, particularly this early in the day. See, it doesn't have to test it the same day, but in a day like today, I suspect it's going to test it again because it already did the first one. It already broke through the first one. We know that at this point, it hasn't made it above that bar. When you don't make it up above the bar, when you have a Friday, when the market's been up, when you got A to B equals C to D, when you get all of that together, guess what? Your probability is pretty clean that an operator is going to take their money. And, we'll see where it shakes out, man.
So take it and let me take it.
Take it and go.
Take it home.
Take it and have a great weekend. Exactly, man. The key is, folks, is to take money out of the market. That's the key. If you leave that money in the market, guess what? Your probability goes down. That's just common sense, man.
Well, and that account gets bigger, and you're just more likely to put on more, and you lose it. Yeah. Just as fast, if not faster, than you made it.
Well, and what happens is that if you did it once, you can do it again. That's the key to always understand, folks. Okay, that you can. I'm comfortable with compounding like 3 times. Okay, when you get it 2.5, though, man, you better start taking some bread. I mean, if you don't take bread, let me tell you something. That 4th time you go after it, bye-bye.
It goes moldy, man. It goes moldy.
There goes your house, your car, your boat, and everything. We get our man, Mr. Nico, right here. It's a beautiful thing. Nico Dahan, he's going to be coming up. He's got a special guest today, Paleo on the Go. And Basil's coming up next, 11 to 12. Then we got our man, Mr. Nico Dahan. Darrell's going to be back with you. Have a great one, Darrell.
All right, you too, man.
Thanks, man.
Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.